Good evening. Welcome to the webinar about renewal and refinance. I would like to start with disclaimer. This information is made available as a self-help tool for your independent use and is not intended to provide investment advice. I cannot and don't guarantee the applicability or accuracy regarding your circumstances. I encourage you to seek personalized advice. My name is Boris Sapozhnikov and I'm a mortgage professional. If you would like to get a personalized advice, please use Linktree Boris S. Here's on your screens you can see Linktree Boris S. So let's start our webinar. If during the webinar you will have any questions, please use a chat. It should be on your right side or maybe below. Please use YouTube chat to ask any questions that you may have. Again, if you want to get a personalized advice, you can reach me through the Linktree boris.s. So we will start with mortgage renewal facts. A mortgage renewal is when your current term comes to an end and you sign on for a new term. Mortgage loan providers depend on the fact that the majority of homeowners are too busy. So basically, let's say you have a term for 5 years. 5 years comes to the end. You will get a letter saying, please sign. Your new interest rate will be, for example, 4.9. You are signing this letter and basically your mortgage renewed. Very easy process. But instead you can look for a better rate or maybe for better lender, or maybe you can do something else. In order to do this, you need to use a mortgage professional who will shop around and check that maybe a better rate exists. If you want to apply through the mortgage professional, you will need to submit a mortgage application as though you are applying for a new mortgage. Is it worth it? Let's look on the following example. So here is a standard example, and here we also will learn what the majority of homeowners believe. Let's say balance on your mortgage $400,000 and offer the mortgage rate 5.59 for 5 years fixed, and your mortgage monthly payment will be a little bit more than $4,700. Let's say I am able to get you a better rate, 5.14. So your mortgage payments a little bit lower and difference in payment just around $98. If you multiply this by 5 years, 12 months, so you will get approximately $6,000 savings. A lot of people or homeowners believe that it's not worth it because it's just $6,000, and also they believe, oh, just $100 per month, it's not worth my time that I will see to reapply for a mortgage. It will take several days, it maybe takes several weeks, it's not worth it. A problem here that it's completely wrong calculation. So what I'm trying to say, on this specific screen right now, what you see how is wrong, or a wrong in example, how people believe they should calculate differences in interest rate. Okay, so now on this screen, the same example calculated differently. So what I'm looking for? I'm looking for several things. I'm looking what will be my balance if I pay 5.59%, and I'm looking how much interest I will pay in 5 years. So as you can see, in 5 years my balance at the end will be $336,903, and my interest will be a little bit more than $102,000. If I will use calculator and I want to find what will be my balance and interest with 5.14%, I can find that my balance after 5 years will be $334,000 and interest I will pay $93,000. So basically, I'm not just winning in payments. I'm winning here that my balance at the end will be lower, and I'm also winning to saving on interest. So this is how I need to calculate. I need to compare between balances at the end of 5 years. I need to compare between interest at the end of 5 years. And if I compare, I will find that my difference in balance will be a little bit more than 2,500, and my difference in interest will be a little bit more than 8,400. So my total savings more than $11,000. I will go back to the previous screen. So majority believes the savings only around $5,000, $6,000, but actual savings around $11,000. So in this simple example, I am showing that majority homeowners thinking, oh, I'm saving just $50, $90, it's not worth it. It's actually worth a lot because you're saving more than $10,000 by saving just $90 monthly. Here you can see a question mark. Question mark means that I will pause a little bit and I will check if maybe some questions in the chat. So I'm checking the YouTube chat. Right now, no questions here. I will just type hi, so you can see that you can type here your questions. Don't worry about the language. You can ask questions on different languages. If I don't know the specific language that you're using, I will use Google Translate, so you can ask your questions in any language. Yeah, I'm personally speaking 4 languages, so I'm guessing that one of your languages I will probably know. But again, if you speak in different language, you can use Google. I can use Google Translate and translate your question if English a little bit difficult for you. Okay, so I will continue my presentation. Maybe you will ask questions later. Okay, so I would like to speak a little bit about interest rates. A lot of people asking me how to get the best rate. So it's impossible to get the best rate. Why? Because virtually, what is the best rate? It means that every condition is perfect. And this is what I want to speak about, conditions and factors about the best rate or about the best rates. What is actually happening in the real life, you probably have a difficulty with something, you just missing some of these factors, or some of these factors is not playing a good role, and you basically will not be able or capable to get the best rate. But by using mortgage professional or working personally with me, I can guarantee that in your personal circumstances, you will get the best possible rate in Canada. And how can I guarantee? Because I'm checking all these factors, and the factors that play a negative role, I am working with you to improve these factors. This is why the first condition, time. Try to start shopping for new rates 120 plus days before. So approximately you can start even half year before your renewal, 5 months before. The earlier than you start, the more chances that I can guarantee you will get the best rate, because I will help you to get it. So credit score, credit history has influence on interest rate. Employment type and income has influence on interest rate. If you're self-employed, or you have a corporation, or you employed on just a regular standard full-time job, is 3 different categories. and it's three different types of interest rates. Loan size. If you have $100,000 mortgage or you have $1 million mortgage, it's a huge difference, and it's huge difference in interest rates. Home value. If your home value less than it was valued before, or if your home valued now more than it was valued 5 years ago, it's a huge difference, also has influence on interest rate. Loan to value, or LTV. This is like, for example, your house costs $500,000 and you owe $400,000. So your loan to value is 400 divided by 500 is 80%. So in this case, you will have special interest rate for 80%. But if you owe 85%, it will be different. If you owe 50%, it will be completely different. So LTV has influence on interest rate. Debt ratio. So debt ratio is how much you owe currently compared to your income. If you have 32-40, it's the best. If you have 39-42-4, it's worse, I will say. But if you have more than 39-44 percentage compared to what you're owing to the bank or any loan organizations, the more you're owing, the interest rate will be worse. Okay? Length of the term. If you pick 1 year term, 2 years term, your interest rate will be higher than if you will pick 5 years term. Your interest will be higher if you pick 10 years term. So every term for how many years you will pay your mortgage has influence on interest rate. Amortization. How many years left to pay your mortgage, to pay out your mortgage completely? So 5 years or 35 years, completely different interest rates. This house, your second house, this house is rental property, or this house is just your one house and is owner occupied, completely different interest rates. Home location, province, British Columbia interest rate, Manitoba interest rate, Alberta interest rates are different. Why? Because in every province we have a little bit different financial institutions. Of course, some financial institutions giving mortgage across all of Canada the same way. For example, we'll take big bank like TD. TD giving mortgage everywhere. So your interest rates in TD in Alberta and Manitoba probably will be the same. But some lenders, even if they are giving mortgage this almost every province, they may decide that for Alberta it will be a little bit lower or higher compared to Manitoba. And it can change after several months. Loan type. For example, if you have readvanceable mortgage, your interest rate will be a little bit higher. What is the readvanceable mortgages? I will speak later. And the most important factor, I put this in the blue, availability to buy down the interest rate. Every mortgage professional, I'm speaking about mortgage brokers, I'm not speaking about mortgage specialists. Mortgage specialist is someone who usually works with one financial institution. They don't have this option. They cannot buy down the interest rate. For example, you go to the bank, let's say bank A. I don't want to say name because I don't want to put any shadow on the bank. Okay, so you go to the bank A, you speak to the mortgage specialist. Mortgage specialist say, I have 4.6. You say, okay, it looks good. Can you make this rate down? Can you buy down the rate? I heard this is an option available. I was on webinar, and person who was doing webinar said you can buy down interest rate. And he said, no, he never heard or she never heard about it. They cannot buy down interest rate. But mortgage brokers has the ability to buy down interest rates. How we are doing this? We are using our commission to give you a better rate. So basically, if I have a client and I see that his bank giving him 4.8. So I'm looking around and I found the same rate with a different bank, 4.8. It's not worth to the client stay for 4.8. So at least I would like to help him and get better rate, let's say 4.7. So how I can get this difference, 0.1? I speak to the bank, I say, I don't want to get my 100% commission. I will be okay to get 70% of my commission, and I want to buy this rate down. Only mortgage broker, mortgage agent who are considered mortgage professional, independent advisors who are not working for the specific bank, who work independently, can work with the different banks and ask for better rates for you. Okay, please remember this option available. And also please remember, not every mortgage broker will buy an interest rate for you. A reason why? Very simple. It's a commission. Okay, so not every mortgage broker will be willing to give part of his commission, then you will get the better interest rate. Okay, I myself calling myself discount brokerage, so it's in my policy to give you discount rate, so I will always buy down interest rate for you. So as I said at the beginning, I guarantee the best interest rate for your personal circumstances. Now I would like to check if anyone asking any questions. Okay, I don't see any questions at this moment. It's completely fine. It's maybe I am too clear or everybody know what I am talking about. But if you will have any questions, don't hesitate to type your question here or just contact me directly through the link that I provided at the beginning, or I can actually type my phone number 204 998 349. Now I texted this through the group chat, so you should see this now in the group chat. This phone number in Manitoba, because I'm located in Winnipeg, Manitoba, but it doesn't matter in what province you right now watching me, from BC, British Columbia, or from Alberta, or Saskatchewan, or Ontario, or Quebec. If you want my help to renew or refinance your mortgage, you can reach me using this phone number. Text me and I will call back, or I will text back, and we will discuss what is the best option for you in your province. Okay, so I go back to my presentation. I don't see any questions. So what are steps for mortgage renewal? First of all, please contact your lender as early as possible and get a letter or get an offer. See what rate your mortgage lender provided. Let's say mortgage rate that you will get 5%. After, you can contact me as a mortgage broker through this link boris.s or through the phone number that I provided, and I will get a better rate for you. Or remember, always a better rate available. It's rare that the better rate is not available. If you start shopping around, you will definitely be able to get a better rate than your current bank. Several tips for mortgage renewal. You need to think about your future financial goals. You always should shop around. You always should force or ask bank for better rate. You can hold your rate for 120 days, 90 days, 45 days. It depends when you will start shopping and when you have all documents available. Let's say you started 6 months and you prepared all documents up front, so of course you can hold rate for 120 days. And one trick here about float down option. Again, it's not every mortgage specialist able to do it. I will say rarely mortgage specialist can help with this. It's not every mortgage broker can do it, and not every bank can do it. So speak to your broker even before you started about how to flow down rate. What is a flow down rate? Let's say you sign contract for 4.7. Okay, let's say I created a mortgage for you. Your bank provided, like, bank's option was 5. I found 4.7. You signed contract with me. Make sure when you sign contracts with me, you don't need to worry when you sign it with me because I'm always checking this option. But when you sign it with somebody else, checking if you have option flow down rate. What does it mean? You have 120 days. It's 4 months. It's possible that rates will go down and possible that rates will go up. If you have flow down option connected to your contract, you and your mortgage broker together can wait until rates will go down, and let's say rates go down to 4.5, and you can decide to freeze this rate. You can reconnect, you can ask your broker, contact again the bank even after everything already approved, and ask to push rate down. Again, it's not everywhere available. I'm almost always have this option. I will say 99% of cases I have this option for my clients. So if during the 120 days rates go down, I can freeze. Sometimes clients asking me a question, but if rates go down again, you cannot do it twice. You can do it just once. Okay? It doesn't matter with what type of broker you're working. Any broker has option just once in this term, like 120 days, until you wait your renewal. You can have just one time, one option to renew with a lower rate, if it will be available. If rates will go up, it's not a problem because you already fixed your rate. I will just double check maybe some question here. No questions. Perfect. We can move forward. So I've completed to talk about renewal. Renewals is usually a very straightforward process, very simple, so I'm starting with refinancing. A huge difference between refinancing and renewal. When we are doing refinancing, it's basically we want to do a huge changes to your mortgage. We want to change, for example, amortization. Instead of 15 years, we want to put 30 years. We want to borrow more money. We want to do something, like do huge changes. You can do like refinance everything. Like, for example, you had a car, you had a mortgage, you had some loan. You can put everything together under one mortgage. You can save a lot of money. Okay, so mainly refinancing is about solutions. It's not always good rates available. So what I am trying to say, interest rates when you're doing renewals always lower than when you're doing refinance. Why? Because when you're doing refinancing, you're doing big changes. You're usually borrowing more than you were owing before, and this is why your rate can go up. What I recommend to do, so maybe in some cases not like do refinancing, but maybe to do it for shorter period of time. So to have availability after, like, let's say instead of 5 years, 4 years or 3 years, after 3 years have option renew and get better rate. Okay, every situation is very specific, very unique. I need to know what is your case before I'm advising anything. Here is an example. So client had home $500,000, Bason mortgage was $300,000. He had not bad rate 5.75, 2 years left on his mortgage. He paid $1,875 and interest cost until the end of these 2 years like approximately $33,000. He had a car loan. Unfortunately, his credit score went down. and he get very bad score, like under 600, approximately it was around 550. So this is why when he took a car loan, he got a car loan with 90% interest rate. Today, interest rate for cars is relatively high. You can get a loan for 8%, 9%, 10%, and it's considered kind of normal. It's not good normal, but it's normal. But in his case, he got almost 20% rate because his credit score was bad. So his interest on the car in 2 years, $13,000. So what I suggested him to do and what we actually did. So we refinance mortgage, we put together whatever he was owing on the car, whatever he was owing on the mortgage, and whatever penalties bank required to pay, we put all this together. $300,000, $400,000, $300,000, $40,000, and $5,000 penalty. We put all together. All this was $345,000. It was less than 80% owing from the purchase price of the home. We put it on the very high interest rate, 6.84, just for 2 years, just for the 2 years. Why? Because we want to go out from the bad credit. He was not eligible for good credit rate. And we were able to save $605 monthly. When we put car, mortgage, and penalty together, we still saved money. He was able to save more than $600 every month. And he also saved on interest, more than $3,000 in this specific 2 years. So he saved on interest and he also saved on monthly payments. And now he doesn't need to worry about car payments, mortgage payments. He has just one payment for the mortgage once in a month. It's much more convenient, and he has 2 years to repair his credit. After 2 years, when he will repair his credit, I will just move him from this high interest. I will move him to another bank with low interest, because I'm working with him right now to repair his credit, and I believe in 2 years we can do it. Before I'm starting to speak about all-in-one option, I would like to check if maybe any questions I have here. No, I don't have any questions, so we're good to go, or we're good to continue. Again, if you will have any questions, use a group chat. If your question is very specific and you worry about your confidentiality, you are right. Please don't ask any questions here, especially if it's about refinancing some personal issues. It's better to give me a call after a webinar today or call me tomorrow morning. Okay? So, what is the all-in-one? All-in-one mortgages is basically multi-level mortgages or multi-component mortgages. It's basically mortgages that consist from several levels. Like you can borrow the same money, but you can borrow it differently and put under different interest rates. You can put something under variable rate, something under fixed rate, and you can even make sure that these two mortgages will speak to each other. Here is just basic an example. House value $500,000. Somebody owing $250,000, other debts $80,000, and borrowing room $70,000. It means the client still can borrow more money if client wants. And how this all-in-one works. So let's say somebody put on mortgage $395,000. And let's say he went to the bank and got very good rate, 4.3% for 5 years. Very good, attractive today rates. I believe is very good rate today. Okay, if your bank is not giving you this rate, so sorry about this, but this is very good rate and you actually can get this rate. Okay, so let's say you got 4.3 rate, you're very happy. You checked your balance after 5 years. This is what will be your balance. This will be your interest cost in 25 years if this interest rate will not change. What I can do in all-in-one, I can put one mortgage on, like I dividing this amount, $395,000, and I put one part, $290,000 under the mortgage. Another part I put under the HELOC. It's variable mortgage. It's not just variable mortgage. This mortgage has very huge flexibility. What do I mean by flexibility? If you not borrow it until your limit, you can still continue to borrow. It's like with a credit card. Let's say you have a credit card, limit $2,000. Let's say you just use $500. You still can borrow. You can still borrow another $100 if you want. You can borrow even more, up to $1,000 if you want. Usually I not recommend to borrow more than 50% from credit card. I'm usually saying 30% this is the best, maximum up to 50%. So let's say you owe in 500 from 2000, so you still can borrow. The same with the HELOC. You have a room, like in the previous example, you have a room here, $70,000. So if client wants, he can borrow another $70,000. This is how works HELOC. If you want details, more information about HELOC, I can explain separately, or you can ask question right now. And what is interesting, the interest rate on HELOC 7.2. This is the current interest on HELOC almost in any bank in Canada. Some maybe have even higher interest rate. So it's this interest rate on HELOC, it's a simple interest. So this means this interest calculated not compound interest, not like regular mortgage. Like in regular mortgage, it's standard that it will be compound semi-annual. So interest recalculated every half year. It's mean when you have a regular mortgage, you pay interest on interest, interest on interest. And this is why mortgages with interest rate small, but person actually pay more because he pays interest on interest. So every mortgage in Canada, standard mortgage in Canada that has a fixed interest rate, compound semi-annual, so compound every half year. And this is why people, even with relatively low interest rate, pay a lot of money. But when you have HELOC, even if your interest rate is higher, this interest rate is simple. Bank is not allowed to do interest on interest. So whatever interest you will owe, you will pay it at the end of the month or in the middle of the month, whatever is with this bank. It can be middle of the month, so you owe some amount, interest that you owe will be calculated for this specific month, for whatever amount, and it will be very simple interest calculation, and you will pay every month. So what I did, I put $109,000, a little bit more, on under 7.2. I put $290,000 under 6.14. I connected between these two mortgages. Why? HELOC has another name like home line of credit, but we call this also as a mortgage because if we put it on the house, it's like another or second mortgage. And these two mortgages started to speak to each other. So every time that I pay down a regular mortgage, more room will be available in the HELOC, so person can even borrow more money if he needs. look what happened. Because these two mortgages communicated to each other, actual ending balance in 5 years was lower and interest cost was much more low. Why? Because person capable and able to pay down his mortgage in 15 years instead of 25 years, even if initial amortization was longer. So what I'm trying to say, when you have a special all-in-one account, and like you see Manulife calculator, I'm going to show you calculator of one of the banks that use this type of mortgage that I mentioned before, invincible mortgage. You can actually, with higher interest rate, actually pay out your mortgage faster and actually pay less interest compared to the person who has a regular payments for 25 years. How do you know if you qualify? You can talk to me and I will help you to see if you qualify for this type of mortgages. Not everyone can qualify. It's very strict requirements who may qualify for this type of mortgages. This is why not everyone has this type of mortgage. Okay, so I promised to show an example. I just want to check maybe some questions. I don't see any questions, so I want just to switch my screen and show an example. Okay. So now I'm using Manulife calculator to show, like, here is a house, $500,000. Let somebody own $395,000. He has borrowing room $5,000. Interest rate perfect 4.3, and client even paid $2,200. It's a little bit more than required. Client pays this monthly. Why client decided to pay a little bit more? Because he decided to pay out his mortgage faster. Look what will happen. So client should enter all information about him. Like, I don't really using any checking or saving accounts here. They can even help if you have some extra cash on checking or saving. I took kind of story where clients not owing anything. Let's say everything, car loans and everything that he was client owing, it's inside of this $395,000. Okay. And look what I was able to do. So this is monthly income of family, $6,000. It's an after taxes. Okay. 2,200 going for mortgage. Let's say as expenses approximately 2,000. As I said, all cars, any money that they were owing, we put under the mortgage, so client doesn't have any other expenses, or client doesn't have any other expenses. And see what happened. So Manulife one number, this is how much money you save. Total interest paid much more lower, compare the interest rate, even if you on accelerated way. See, clients was capable to finish, because he was doing a little bit higher mortgage payment, he was capable to finish his mortgage in less than 24 years. Original amortization still 25 years, but because he is paying a little bit more money, he is capable to finish his mortgage a little bit faster, like year and a month faster. But because he put his mortgage under the Manulife, and this is how he divided his accounts, 325,000 he put under 7.2 simple interest, and sub account where is a regular mortgage $74,000, $75,000 a little bit more he put under 6.14%, and this is how it worked. When I'm working with a client, we are playing with this calculator and we are looking for different options. Sometimes this option can be better for client. So I'm changing, I put more money on one account and less money in another account. I can put everything under the regular mortgage. And please see, even if all amount I will put under the regular mortgage and under the HELOC I will put 0, client still will save money and still can pay out his mortgage faster. So every circumstance is different. Every client different. Everyone has a different thing that they are owing, and maybe it's not a goal to pay down mortgage faster, but by using all-in-one account with a professional who knows how to set up it correctly for your family, you can actually save money and start to save from the first day. You will see differences after several months, huge differences. Your mortgage will be paid down much more faster. We will be able to save money much more faster. You will be able even to invest your money somewhere else if you would like. All this under all-in-one accounts. Okay, I am not here to speak about all-in-one accounts. I'm here to speak about refinancing. Just presented one more option for clients who would like to refinance or use all-in-one accounts for refinancing. So yeah, so I'm moving forward because I don't see any questions at this moment. So how to start refinancing your mortgage? So let's say you decided to use refinancing option, not renewal. Okay, renewal we spoke before. What is a renewal about? You check what is the offer of your bank. You just shopping for better rate. You're asking mortgage professional shopping for you. You're getting better rate than with your current bank, and you are reapplying and you get better rate. You're saving money. Very simple process. Renewal. Refinancing also very simple process, but you can do much more. You can put your mortgage for more years or less years. Change amortization. You can put your mortgage under higher interest rate even, but under all-in-one account, when you will be capable and able not just pay down your mortgage faster and pay less interest down the road, you also will be able and capable to pay other debts. But you don't have to do this with all-in-one. If you remember with another example, I showed as somebody consolidated his debt with a car. Person got a loan almost 20%, and I took this debt under the roof and we refinanced it. Many different options available under refinancing. So talk to me and we will find what is the best for you. You probably hear that people borrowing money from their house and buying other houses. Yes, it's also available. You can borrow money from your home and invest it in under another home, and by doing this, you basically can make money because you will have investment property. It's just an example. You don't have to invest in properties. You can invest in the market. So again, many other options available. It's about debt consolidation. It's about investments. It's about many options. By the way, many don't know when you borrowing money from your own home using refinancing, you actually can use this interest when you're doing your taxes. You will pay less taxes. This is what I'm trying to say. You can speak to any accountant, speak to your accountant, or speak with any other accountant. Interest rate that you pay under your mortgage that was used to invest somewhere, doesn't matter where, in another house or in some RSP account, for example, or RESP for your children for future education, this interest actually can be written down when you're doing taxes. You can save money on taxes. Okay, so how to start refinancing? Set clear financial goals, speak to someone, like you can speak to me, Linktree, Boris S. and we will speak about your goal, and we will decide what way we want to go. You need to know what is your outstanding balance on your mortgage. You need to know what is your current payments, what is your current interest rate, what is your current term, and when it started. You need to know your amortization, how many years in total you need to pay. You need to know your penalties, because we want to calculate if it's worth to do refinancing. After you collect all this information, I will help to build a plan for you, or you can consult with any mortgage specialist about your refinancing options. Okay, before I'm speaking about mistakes, just checking a chat. Okay, I don't see any questions on my chat right now, so we can approach the last pages on my presentation or this webinar. Mistakes that you need to avoid. Not considering refinance or renewal at all. Always consider this option because it's available for you. People not thinking about future. People not checking credit history and score, and after everything fell apart. Considering only the bank. Oh, I'm with my bank, I'm just love my bank, I will do this refinancing in my bank. Yes, every bank can do a refinancing. Is it the best option? I don't know. How can we know? Just if you consult with me or will consult with any other specialist. You need to shop around. Who will help you shop around? Mortgage professional. Mortgage specialist works only in one bank. He will not or she will not be able to shop around. Mortgage professional who has ability to work with several lenders can shop around. Don't look only on interest rate. I just provided examples when interest rates was higher and people actually saved money. It sounds weird, but it's true. Everything depends by structure of your mortgage. Of course, if you have standard simple mortgage, the less interest rate, you of course will pay less interest. But if everything other will the same, okay? But if you will put in specific structure, you can actually save money. If you put on certain amount of years, you can save money. So you need to speak about it. It's not straightforward multiplication, addition, subtraction. It's complicated calculations with compounded and simple interest. Two different types of calculations, two different types of mortgages that also can calculate and spoke with each other. You can choose a wrong amortization and can be problem. You taking out multiple loans and it can be problem. We will not be able to refinance or renew. You can switch a job in the middle process and you can be refused. Bank can refuse to do renewal or refinancing. Be careful. Waiting until the end of your term. You waiting last minute, you probably will not be able to do anything. You need at least, I will say, in the worst scenario, you should complete all your paperwork a month before. So you're giving a bank approximately a week to move things around, double check your documents, and you have 3 last week when everything adjusting and everything will be done on time. I strongly recommend to start shopping around 4 months before, not months before. And people not need to negotiate fees or any other things. It's not good. You always need to negotiate these things. You can negotiate legal fees, discharge fees. In most cases, especially with renewal, legal can be done for free. Ask mortgage professional how to get it. Your discharge fees can be compensated partially or completely. Your appraisal fees can be completely returned to you. Your title insurance fees can be returned to you. You can even get cash back when you refinance or renew. You can actually get a cash. Okay, so you do go through this process. You're doing renewal or you're doing refinancing, and you completing the process and got money. You're getting cash at the end of the process. So all this has up to certain limits. All this has limits, but a lot of options available. Speak to your mortgage professional about these options. Okay, so now I want to pause for question and answers. Give everyone time to absorb information that was provided. I was giving a lot of information. I was speaking fast. We are talking almost an hour here. So I will wait just a minute to see or give a minute if anyone wants to ask questions. You're more than welcome, ask question. If you here just to get information, it's okay. If you here but you cannot speak about this because it's confidential, it's okay. Give me a separate phone call. Don't do anything, don't ask questions publicly. Okay, it's a smart choice to ask questions after the webinar. Okay, yeah. So yeah, I will wait maybe a little bit, several seconds. Okay, I believe we can finish our webinar. Thank you very much for everyone who was